India and China hitting the reset button to get the bilateral relationship back on track. Now, both nations have been attempting to get closer, and the momentum has picked up pace after President Trump's tariff onslaught. Direct flights, for instance, are set to resume along with tourist visas and border trade. China has agreed to clear rare earth shipments and fertilizers to India. The visit of China's Foreign Minister Wang Yi appears to have smoothed some friction in the ties, but India and China are far, far from being the best of friends. The clashes between both armies at the Galwan Valley just 5 years ago, and border issues remain unresolved. Both nations have, however, agreed to form expert groups to maintain peace and find a solution. So, is India ready to dance with the dragon, and will this worsen India's tariff tensions with the US? This is the editor's playbook. I'm Shereen Bhan. Joining me on the show, as always, Parikshit Luthra, Prashant Nair, Nimesh Shah, Surbhi Upadhyay, and Sri Ramayar. Gentlemen and Surbhi, many thanks for joining us. Just for the sake of context, because the obvious assumption is that this proximity between India and China, this reset, so-called reset, is on account of the tariff imposition, the tariff onslaught brought on by the Trump administration. But it's interesting to note that actually the attempt to re-engage started well ahead of that, and we'll understand why that was the case and why India felt the need to re-engage with China. But more importantly, a couple of important statements that we want to highlight, and I want to bring up the statement that was made by the Chinese ambassador to India. Now, since April, after the tariff impositions, China has been telling other trading partners, look, stand up to the bullying, quote-unquote bullying, by the Trump administration. Yesterday's statement is important because it goes as far as to say that we stand firmly with India. That's a significant change in not just tone, tenor, but also in what China is saying, Parikshit, to say that we stand firmly with India. Also importantly, I want to go back to the statement issued by Jaishankar, our Foreign Affairs Minister, to say, let difficulties not become disputes. There does seem to be reconciliation, there does seem to be rapprochement, and there does seem to be a concerted attempt on both sides to ensure that this reset is real.
You're absolutely right, Shereen. And this plan to put things back on track began in October last year during the BRICS summit in Kazan, Russia, where Prime Minister Modi and Xi Jinping had met. And there was a consensus to resolve the boundary dispute and move forward. Since then, there have been a series of high-level meetings. So you're absolutely right. We cannot look at what's happening in isolation.
It's not just because of Trump that this is happening.
It's almost 1 year of diplomacy, and the leaders had spoken in October. And now we're looking at a consensus being implemented. So clearly, both China and India feel they're getting cornered. Some of our major groupings, such as BRICS, are being threatened. India does rely on China for its imports, such as those in the electronic sector, rare earth magnets, tunnel boring machines. So we can't cut ourselves off from China.
Nobody's been able to cut themselves. This whole business of decoupling from China has not worked out in the way that it was being assumed. And that's the case not just for India, but for large parts of the world.
And if we look at our imports from China, they're the greatest since 2015. And so we will speak more about that. But the message that India has given out, Jaishankar, of course, saying that differences should not become disputes. Our principles, our relations should be guided by three principles: mutual respect, mutual sensitivity, mutual interest. The Prime Minister made some very important comments to Wang Yi, and this was his message just before the SCO summit, that India and China have made steady progress guided by respect for each other's interests and sensitivities. Stable, predictable, constructive ties between India and China will contribute significantly to regional as well as global peace and prosperity. So our sense is that, considering that government sources are telling us that restrictions have been lifted on rare earth magnets for India, on tunnel boring machines, fertilizers, air travel is going to resume, tourist visas, business visas, media visas, everything is going to start. It seems that we are now going to enter in a phase, or at least the attempt will be to enter in a phase of economic stability. Do not allow Chinese investments in very sensitive areas, but wherever we need them, allow investments to come in.
And you're right in pointing that out, and Surbi will present the data to us. But, there's been divisions from what one has heard and one has reported on over the last few months within the government as well on what position we should take as far as China is concerned. Some parts of the government have believed that, look, there is need for engagement. In fact, as you were pointing out, and we spoke about this, the economic survey last year had very clearly said that we should engage economically with China. So it was calling for that reset. There have been many voices within government saying Press Note 3 should be reviewed. There have been others saying no, there is no reason for a review. But I think, Surbi, the point that Parikshit was also making, and the numbers back that up, that there is an acknowledgement today that you've got to do business with China. You are already doing business with China. If anything, you're doing more business with China than you were 5 years ago. And so there is a need to actually ensure that there is stability to this economic relationship. No, and the numbers bear that out, don't they?
No, absolutely they do, Shereen. And I completely take the point that you and Parikshit were just discussing, that this has been in the making for a while. It's only, I think, this 50% US tariff has become a fresh catalyst that's very quickly changing the tone and tenor of the dialogue as well. In fact, before I get to the numbers, I just want to pull up the comment from the Chinese foreign minister who was visiting India recently, Wang Yi. He said that India and China should contribute to promoting the multipolarization of the world, given and quote-unquote, the unilateral bullying that is prevalent. So this is what's kind of gotten us together to talk a little more closely. Now let's come to the numbers. Now, even though we've had these outstanding, very serious issues on the border dispute, Galwan, which was, back in 2020, the numbers have actually been increasing. Whether you look at bilateral trade, whether you're looking at our reliance on China in terms of our, imports from the country. So in 2020, we were importing goods worth about 65 billion. As of 2025, that number has fallen to well over 113 billion. In 2020, we were running a trade deficit of about 50 billion with China, which has doubled to nearly 100 billion right now. Not just this, and of course, which are the largest imports? We all know that. I mean, electronics, PCs, integrated circuits, telephonic equipment, fertilizers is a very big sort of category as well. So these are the key imports. Not just this, even if you look at foreign direct investment, I mean, it's absolutely meager, as one would imagine, for obvious reasons. So the cumulative FDI coming into India is 3.2%. This is China. This is as of the latest data available as of 2023. And our investment into China is about 2.5 billion. So there's a huge opportunity if the trust issue is resolved. And I think we've seen the beginning of that with the opening of the trade passes, the talk of resumption of direct flights. So perhaps this is a huge opportunity ahead.
Well, trust is a tricky one, and it cannot be something that you switch on and off overnight. It is going to have to be built, and it's going to have to be demonstrated through action. But, Prashant, it's interesting because just last week when we were discussing the tariff impact as well as this re-engagement with China, you were talking about how some sectors in India may actually be vulnerable to this reset, to this greater engagement with China. The contrary view is that, look, if India wants to do more when it comes to integrating itself with the global supply chain, it makes sense to be more deeply integrated with the Chinese ecosystem because that's their strength, and India should piggyback on that strength and ensure that we bring investments into these sectors here. Now, as you look at what the numbers are telling you, as you talk to analysts and investors, what are they saying? What could this reset perhaps mean?
Shereen, the basic conflict is this, right? China, basically, the cost of manufacturing in China, I mean, you can't beat it. No country can beat it. So they are, hence, the factory of the world. All the costs there have gone up. I mean, it's not as competitive as it was because, I mean, it's become a richer country, wages have gone up, etc. Yeah. But it's still by far the cheapest. So, and hence the factory of the world. So if you're going to do business with China, on what terms, right? I mean, you got to do business, as you said. I mean, we're already doing, and I think Surabhi put those numbers, you guys spoke about it. But are you going to be able to sell to that market? And what do you have to offer? I mean, we will get rare earth, we will get access to, those tunnel boring machines, and Parikshit's story spoke about all of that. But what do we have to give in return? It perhaps is access to the market, right? I mean, that's essentially our biggest trump card, a large consuming class. And that is essentially what I kind of sort of looked at last time. Sectors like capital goods, power equipment, EMS, a lot of B2B areas, and these are all sectors since 2020 which the government has promoted And it's been import substitution. It's not so much been China plus one, but import substitution, which has built these sectors up. And that is essentially what I put out last week. But, you know, I'm just looking at, and this is actually very, very stark data. Already, how is China's exports to the world panned out? And I looked at data from 2015, three time points, 2015, 2020, 2024. Why 2020? Because 2018 is when the first Trump administration came on and the first round of tariffs, etc. happened, right? Just look at the numbers. Chinese goods exports, merchandise exports to the US in 2015 were $411 billion. 2020, $452 billion. Right? 2024, $525 billion. It's not that large, right? I mean, what is the rate of... okay, that's Western Europe, $313 billion, $395 billion, $492 billion. Again, I mean, there's growth, but normal kind of growth. But you look at Chinese goods exports to what we call global south. There is no real definition of global south, but largely ex of US, ex of Western Europe, right? It includes Asia, Southeast Asia, Latin American markets, etc. 2015, Chinese goods exports were about $800 billion. Went up to $1 trillion in 2020. 2024, that number is $1.5 trillion, right? So that's already happened. And the last thing, just the growth rate of growth to the US, right? Between 2020 and 2024, 4 years, the growth rate of Chinese goods export to the US was 16%, 1/6. To the global south, it is 65%. So this shift that we're talking about, I mean, looks like, I mean, you know, they've been prepared. They saw what happened with Trump.
China has.
Yeah, they looked at what happened with Trump 1.0.
The shift is...
And they've moved in markets.
Happening.
Yeah.
Exactly. The shift has been happening. Again, as I point out, this is not as if, you know, this is something that's happened overnight. The shift has been happening. It's been happening over the last few years, as the data also suggests.
Shereen, the growth is what, 4x? 4x, actually 5.
Yeah, exactly.
You know, 16% between 2020 to 2024. Yeah. Chinese goods exports to US and to the global south, 65%. This is the rate of growth. Yeah. So, I mean, you know, it just is extremely stark, I think.
No, absolutely, extremely stark, and it also tells you, which is why we've seen, anti-dumping duties, the imposition of safeguard duties, and so on and so forth coming in from the Indian side. In fact, including duty announcements that came in just a few days ago. So you know, we're seeing that play out, and everyone's been cautioning about the capacity in China, the unused capacity in China that is going to be used to kind of quote-unquote flood markets.
You know, there is only one. I'm sorry, I'm just digressing. There's only one silver lining here. I did a program on it called, you know, they are doing for their own reasons, because there is so much capacity that it is actually deflation in China, right? So there's a word called involution, which means in China it means race to the bottom. So they are enacting measures to prevent this race to the bottom. So for their own reasons, they are curbing supply across a range of industries. So that's a different point. It's not to sort of, you know, protect other markets, other end markets. It's for themselves, which I think at the margin helps us a little bit.
But Prashant, you raise a really interesting point. I mean, and maybe Parikshit and Shereen both can weigh in on this. What do we have to give in return? We've been protecting our markets. One of the reasons why this trade negotiation with the US has proven to be so tough is because we want to protect our interests, our industry, our capital goods producers. So really, what are we going to offer to the Chinese to S2?
You know, you're right in saying that what we can offer, but you know, they also need a market like India to
everybody needs the Indian market.
Sell their products, right? So it's going to be.
We want to make in India.
Absolutely.
We have our trump card, our rare earth.
Exactly.
Our rare earth is
1.5 billion people.
Correct.
Yeah.
Is your bank balance, Prashant?
So it's not going to be like.
But it's again, I mean. Given the strong focus on Atmanirbharta, and the Prime Minister reiterated that in the 15th August speech as well, I mean, balancing this perhaps, Shereen, easier said than done?
No, it is going to be a balancing act, and I don't think there are easy answers to this. But for instance, you know, if you bring up the Apple Foxconn story, right? I mean, the component dependence, the component ecosystem is still largely China or China reliant and China dependent. But India has benefited from it, right? I mean, as per the latest data, the largest shipment to the US of iPhones has been from India. So I think that there is merit in engaging, in forging deeper collaborations, deeper partnerships, or even investments in some areas where it stands to our advantage. And that is, I think, something that we need to look at and we need to weigh on closely. Prashant, go ahead.
Parikshit did a show, I remember, with the author of the book, Apple in China, Parikshit, if you, right? And the thesis of that book was how Apple helped build, basically, the common narrative is that Apple built, China built Apple, right? I mean, but the book turns it on its head and says, well, actually, it's Apple which built China and taught them how to do scale manufacturing. So, in a way, I mean, it's just food for thought. Can we use the Chinese experience to build that here at scale? I think.
Are we going to learn from the manufacturing from the Chinese?
Yeah.
I mean, they are the lowest cost.
One anecdote.
Why would the Chinese be happy? I mean, enabling us to build an ecosystem rivaling theirs.
One of the answers is, I think.
Prashant, Sriram, if I can just add to Shereen's point, 3 years ago, Shereen, we had done a story about how India is considering Chinese investments and allowing them on a case-by-case basis. There were at least 14 or 15 suppliers of Apple which were allowed to have JVs with Indian entities to allow those components to be manufactured in India.
Correct.
Even now, we are allowing Chinese JVs. The process of vetting and approval is long. It can take 7 to 8 months to a year, but it is happening in areas which are important to us. So I think the understanding now is allow it, take advantage of global value chains in China where it is advantageous.
And I think to the point that you were making, Prashant, and I think Sriram will come in as well, I think we also have to realize the shifts that have taken place in China. China has moved beyond being the low-cost factory of the world. That aspiration, it's moved beyond that. Today, it is the R&D nation of the world. It is making significant investments in R&D across sector, from artificial intelligence to electric mobility. I mean, the Chinese are right up there, commanding.
If you saw those visual,
and the aspiration to move up the value chain and actually deliver on that has been a phenomenal story as far as China is concerned. So I think, to the point that are they happy about? Of course, they're not happy about the iPhone manufacturing moving to India. But do they really care as much? I don't know. I'm not sure.
Go ahead. It's just that that book again. That book is extremely interesting. I read it, and it says China. What did China do? It used its it also had actually only one big lever, right? It was its consuming class. I mean, for Apple at that point, it was the biggest market, by far the biggest market, fastest growing market, and they used it to their advantage to get Apple to make and invest, move out of Taiwan and move into China in a big way and build capacities. And Shereen, to the point about what China has done, right? There was in another context, Eric Schmidt, who made this point. He said there's no other country in the world which can get capital, talent, the will, and long-term commitment together in a concerted way like China can. He was talking, of course, in the context of how we wanted US to keep its AI sort of advantage ahead. And he said, well, China is closing up. In 2015, Shereen, China came up with this policy of Make in China 2025. This was in 10 years, right? And, when we look at things like EVs, renewables, solar, and the robotics, for example, and these are all sectors identified back in 2015. And I think a lot of people that all of us speak to here say that, well, we need those kind of, identification of 3, 4, 5 sectors. Like, these are going to be our champion sectors. We're going to put everything in it to build these out over the next 10 years, which in some ways the government is trying to do with PLI, etc. But
the other opportunity...
but if you... go ahead, Sriram.
The other opportunity is essentially to to capitalize on your strength. That is the point you're making, right? Yeah. China had a strength, it capitalized on it, allowed investments to come in, and everybody won. So India's strength is services. I think the point is that if you're trying to say that I'm going to rebuild a manufacturing outfit or a ecosystem like the way China did, that's a 30-year project. The world
And there are question marks on whether another China
started that,
is
right?
even
You started
required.
that. I'm saying we started
India
that.
and everything.
It's not like you don't need manufacturing. Manufacturing can happen. But I think there is a merit in, and this is an argument that Raghuram Rajan has been making for years, right? Don't try to be another China. Let's build a services industry because that is our strength. And export services as much as we can. And here there is a humongous opportunity in terms of being that enabler for Chinese manufacturers, Chinese investors coming into India. Because I think that floodgate, like Parikshit said, is likely to open sooner than later. Because in terms of what China wants from us, other than the border areas, one of the things that it wants from us is room to invest. And I think that is the easiest thing to give up also, right? We might not be able to settle border disputes immediately. But allowing Chinese investors to enter India is going to, it's
And
a
more permanent, durable FDI, not the hot money nature.
Correct. FDI.
Durable FDI.
FDI, right? Because the trade is unstoppable, like you showed, right? I mean, no matter what barriers
There is
you
dependency
put,
anyway.
China, there is no alternative to Chinese goods. So the capacity, so therefore, we need FDI.
Sriram, there have been bans on Chinese apps.
Correct.
Hundreds of them.
Correct.
There have been Chinese officials who are under the scrutiny of the Enforcement Directorate, criminal investigating agencies. So this is all that China would want.
Will TikTok come off the ban list?
There is a White House account already.
Dance again.
Imagine Zuckerberg's situation.
No, again, think about it.
Yeah.
You know how many apps have flourished in India because TikTok is not here?